Hello, everybody. I'm Tom Sosnoff. Welcome to Truth or Skepticism. He's Dylan Ratigan. Dylan, how are you?
I'm good. I've been having some of your colleagues. You have an interesting group of people you work with.
No, I don't. No, I really don't. They're not interesting.
And they've been breaking my balls, as they say. You know, they've been giving me a hard time on the Zoom calls. And they've been really pressing me on the idea of, they wanted to know, what is it? Remember, I wrote a book called Greedy Bastards.
Yeah.
And so they were like, well, what is a greedy bastard? Because my book was theoretically, I was asserting like the essence.
How can I forget? It's been banned in most schools in Florida.
The ethos of greedy bastardism was the subject of my book.
Okay.
And so your people, they're like wild dogs. It's like the reservoir dogs. They self-organize spontaneously with an agenda, and then they just start pouncing. And they're like, what is a greedy bastard? And I was saying, well, a greedy bastard, at least as I articulated it with my evidence and my research for the book, was a greedy bastard is someone who manipulates a system to extract value. So I either withhold information from you that's relevant to sell you a house, but I don't tell you about the train tracks or the flood or some significant, or a car that's a lemon. Okay. So some sort of deception, or I artificially restrict your choices. So that, like, I'm like, oh, you can do A or B, but there's like, what about options C through Z? You know, like, you can do whatever you want as long as it's a hot dog, you know? You're like, hang on a second, but I want a hot dog. And so it's some sort of deception was my argument. That's a greedy bastard. A greedy bastard is someone who manipulates a structure to take value as opposed to contribute value. I'll partner with my friend Tom and we'll make a better technology that helps people learn things and or whatever, a blueberry stand, whatever. They're like, okay, that's fine. That's a greedy bastard. They accepted my premise. They even appreciated it philosophically. And then they said, what's the opposite of a greedy bastard? Which is what no one has ever asked me to define before. And I said, the opposite of a greedy bastard is someone called a Zen opportunist. And it's someone who can see the inefficiency, the chat, like you could see, you're like what we know in the professional pits about volatility, selling, and risk. Is something we can bring to more people because I see this opportunity. Is that an exploitation of people? I would say no. It's a benefit to people. It's an exploitation of technology, right? That would be a Zen opportunist in my book. I'm giving you that praise. And then there's a world between the Zen opportunists, the most obvious, one being the one who makes the heart transplant, existential, right? Like, I've cured cancer or whatever, down the line of financial, housing, whatever. And then you sent me an email from, I believe, a Tasty viewer that said that they believe that all capitalism is some form of deception, manipulation, or trickery. Because market making is the ally of those who are the best tricksters. That the people who make the best markets are the best tricksters. They just are better. There's more liquidity with a trickster than there is with a non-trickster, because the trickster is better at creating transaction frequency of anything, whether it's good or bad.
Okay.
Which I think is probably also true, or at least somewhat true, that there's an incentive to deceive, to close sales, right? I don't want to tell them about this thing or that thing or whatever, because I don't want to screw up the deal. There's an incentive to withhold it.
I don't know if it's an incentive to deceive as much as it is as much as it goes back to your greedy bastard.
Yeah. And so anyway, I thought it'd be interesting to hear your opinion, because obviously there are obvious examples, like withholding water from flood victims.
Right.
And then there's who decides, and all the spectrum in between.
Yeah. I don't want to get into, I think it's really difficult to talk about,
Yeah, no, of course.
Capitalism, socialism, whatever you want on an incredibly broad scale. But if we tie it down to finance, I really believe it all comes down to liquidity. So, there's the wonderful thing about capitalism is that, and this is the part I think that people don't really get, is that it figures it out. So the way capitalism works is eventually it figures everything out. The way socialism it works is nothing ever gets figured out because there's no reason to, because there's no need for liquidity or efficiency, so nothing ever gets figured out. The way raw capitalism works is it attracts, that greed does not last. It's like arbitrage. It doesn't last. So what happens is it eventually, opportunity gets, people hear about opportunity. They hear the noise and they all come running. And that means like tons and tons of money comes running into every opportunity. And then it gets flooded with capital. So it becomes either overly efficient or all the edge is gone. And that's why capitalism works, because then it gets down to the point of liquidity with virtually zero greed involved. Like you go from the best example I can give is like in the stock market. The markets on even a very liquid stock 30 years ago were 25 cents wide. Now they're a fraction of a penny. And the reason is, it's just, we went from hundreds of millions of dollars to billions of dollars to trillions of dollars chasing returns in financial markets. So the place with the deepest structure gets all the liquidity and therefore all the efficiency, and therefore that's why capitalism works like nothing else, because it solves its own problems. It's self-policing, because that's the beauty.
But only for the most liquid assets. And
that's right.
It creates an incentive to rig the market through structural monopolies for things like health insurance. And so I guess how do you reconcile the
health insurance is not, we don't really have. The problem with health insurance is
it's a legislated structure. It's a social, it's not even, I want to edit it, but it's not I guess my issue for you is yes, I agree, right? If it's liquid, I don't think it's worthy of dispute. The system's been shown a billion.
If we were to create a healthcare system that was, where there was where people could participate and create a true, healthcare system that was based off, free market capitalism, you would have an incredibly efficient healthcare system where everything would be priced perfectly. We don't have that.
It's the same thing with the cable company, with the cell phone. The point is that this is what I would say is interesting, because this goes back to the beginning of my career, even with Mike Bloomberg, right? Or the whole celebration of Bernie Madoff pre-scam, where it was like, decimalization and tighter spreads, and then Tom Sosnoff shows up and he's like, I can.
Yeah, but that's the beauty. That's the beauty of it.
I agreed. Okay, fine, but. So I have these piranhas because I got Sosnoff and Scott Sheridan, these dogs, and they're just going to chew through the market, right? And they're better at it, and they're faster.
But how can we be? It's too efficient.
What I'm saying as in a metaphor for you and a billion other people that are just
right. Okay.
Not you individually. I don't mean
I'm just saying, me and a billion other people still the same thing.
Yeah. No, okay. But that exists. So I have an incentive to manipulate the structure, whether it's the health insurance company, the drug company, the energy company, like the biggest companies, to do rulemaking that protects me from that.
You sure do. That's why they call them lobbyists. But when you look at different.
My point is not. I'm sorry to keep interrupting, but my point is I'm just going back to the voice of this email, because your email.
Yeah. No, I understand it. I understand.
And I mean, can I just read a section of this? It's been really laying down the lumber here. This person is saying, proponents of capitalism, it's a scam. Capitalism is a scam competition. Whoever scams the best wins. How can you save the planet from destruction by human behavior when all of human behavior is driven by this bizarre scam competition, and who can deceive the next person?
Yeah, but that's ridiculous.
Which is obviously cynical. Agree.
Yeah, I mean, that's somebody. That's just a bitter person writing, because they had a bad experience. The beautiful thing about capitalism, like I'll give you an example of like a space that's interesting, like drugs, just drugs. And when you think about it,
you mean like cancer?
No, just prescription drugs and things like that. And when you start to think about, like, that's a space that is in the process of being disrupted by Amazon, by Mark Cuban's company, by lots of other companies that have finally decided, okay, you know what, these spreads are too wide. Car companies that have been disrupted by, Musk and new technology. Hey, these spreads were too wide. The whenever there is true open competition, there is so much capital in the world right now that it will get, eventually there will be competition for whatever like fat is still on the bone or whatever meat is still on the bone.
Or there's an incentive for a strong government control of core resources.
Yeah, but the government's not capable. The government is too stupid, and they can't. They don't have the know-how.
They're smart enough to make the rules that preserve the status quo incumbents with the fat margins.
That's relatively simple to do because the rules are so broad-based and they're so and they speak to, nobody really has the know-how to question it. But the problem is that I shouldn't say the problem. The opportunities in a true free market, the opportunities are always going to be there, and the opportunities are always going to solve the problem. That's the beauty of capitalism. There are lots of kind of holes, and there are lots of places where you can fall through the cracks. And there are lots of places where, we just haven't gotten to it yet because the technology is not there. The technology is not there to help solve the problem. It's all coming. But the idea that it's about greed, I don't believe it. I believe that.
No, but what about the incentive to deceive?
Yeah, that's what I meant. The incentive to deceive, I don't believe that that's part of what human nature is all about. I believe that human nature there is a motivation of greed, which I think you captured quite well when you talked about that. And there's a big difference between greed and deception. Going back to my early days as a market maker,
incentivize deception, right? If I lie to you, if I say my diamond is whatever, if I say if I'm in an illiquid market and you're under distress, and I say I'll give you $10 for your $100, anyway. You're going to,
but that's like, so I was going to go back to my early days as a market maker. I mean, there's no way I was going to give you the best price if I didn't have to, but I wasn't deceiving. I was just greed. I mean, I don't know, like, why should I trade something at theoretical value when I can trade something?
No, I think that's why it's so interesting, right? Because that's sort of like and who's going to argue with that? Like anybody who's ever
exactly
had would sit in the same chair and be like, yeah, of course, like I'll take whatever the market will bear if I can make 20 cents instead of 10 cents.
Right. Like, so what happens is that eventually, that's the beautiful thing about what technology does, and that's the beautiful thing about what competition does in a true free market. It actually preserves. And it preserves the whole notion of capitalism and the whole way it works, and it's really just fascinating to me, and that's why our system basically in this country, that's why our system works.
I mean, again,
everybody you can always argue. We have lots of faults, and we have lots of a lot of stuff doesn't work perfectly.
I'm not I don't want to break the country's balls.
I understand.
So let's say there's three types of business. One that's been sort of planed clean, like through the wood chipper, like through the piranha field, like the bones have been picked dry, which I would say like online travel, online book sales, like some obvious things that where it's just, even spreads on stock trading, like it's free, but payment for it, like if they've really nailed it down, right? And then things that are egregiously, wide markets, whether it's pharmaceutical margins or IT margins, some, bit different sort of things that are, and then you have the transition in between, right? So the brokerage industry has been going from wide margin to tighter margin, and you could argue that the biggest opportunities in that last category. Right. That if you're in a market, if you go to online travel today, the margins for selling online hotel rooms will be pretty tight. Right.
Yeah.
But if you
everything's tight, where there have been advances in technology, everything's tight.
Which is why also I think people swim into everything from crypto to biotech to AI, is the belief that there's fatter margins because there's more uncertainty and more risk and more opportunity, which one could argue you had a decade ago or longer when you were like, I'm going to make my own broker, which now it's like, great, but now the world's caught up to you. But at the time, it was a little bit more of a piece of madness.
Yeah, I think that those opportunities, opportunities in mature businesses will always exist, and opportunities in businesses that are just inefficient will always exist. And that is, that is really the beauty of where we are. That's the beauty of where our economy is, and that's the beauty of where our technology is. And that's the beauty of also being able to raise capital, being in a place that you can raise capital to do that if your story's good enough. So I actually, listen, I don't believe that capitalism is designed to be deceptive. I don't believe capitalism is a scam.
To the degree to which there's an incentive for someone like, I forget his name, at WeWork, the big boss at WeWork, or Liz Holmes would be probably the most famous, where there's an incentive for a charismatic storyteller, dare I say, deceiver, to.
I mean, listen, fraud. You can't account for fraud.
But I'm saying, doesn't capitalism incentivize that? Right? I have more resources, more power, more everything if they believe I've got the world's ultimate blood test.
I mean, there has to be at some point there is a certain moral and ethical obligation. That's why we don't. But that's why when we're getting divorced or something, we don't kill our partners. I mean, I'm just saying there's a reason why we don't do certain things. Fraud is one of them, and that's why those people go to jail. I mean, was it worth it for Elizabeth Holmes? Was it worth it for Sam Bankman-Fried?
It's a great story.
Is it a good story?
I mean, it's a demonstration of unusual skill. Because even the biggest frauds that are successful require very talented individuals. So you're like, that person is highly focused and fastidious and nuts.
Really? I don't know. There's a lot of really smart people. Just because some people decide to use it in ways to deceive others, they rarely get away with it.
I'm interested because I feel like you're very black and white about that activity relative to salesmanship or pricing in a capital market, which I feel like is much more gray than you. I would say if I was going to,
I get it. I understand the greedy bastard part of this discussion, but I don't think you can just go, just blanket say capitalism is a scam.
Because of course. And so is there a filter that you use for deal selection? In other words, the degree to which obviously liquidity, let's say, is you're like, listen, if it's liquid, it's real. It's sort of a Sosnoff like bumper sticker, right? I mean, if it's okay, if it's liquid, it's real. But is there a filter beyond that?
Yeah, I think there is. I think there's a certain, listen, we should get some credit for having, certain street sense and a certain street smarts. We had a lot of opportunities to do business with FTX, and we chose not to. We had a lot of opportunities to do business with a lot of companies that are just you kind of see through the cracks, and you see through and something doesn't look right, and you have to make those decisions. We could have taken our company public via SPAC for $500 million more than we sold it for. And we didn't because it didn't look right. This morning, I was on an email chain with a guy that it's just a small little license agreement for a piece of software with some company that will help us with, one of our middleware pieces. And the guy actually gave me a line of, if you do it today, I can give you like a certain discount. Let's say like 20% discount. I can
close you today.
If you close it today, I can give you like a certain discount.
My sundown, brother.
Well, you have to close it by, I guess, the end of the week.
Midnight.
If you don't, it's going to be 20% more next week. And so I said, my response back to him was, hey, thanks, but we'll find somebody else. There's a lot of competition in the space they're in. So that was just like, I really liked their platform.
But that's a cultural filter, right? That's a cultural
filter. Yeah, so there's a lot of things.
The liquidity filter, let's say, and then you have this cultural filter, which is defined by whatever, some vernacular.
And listen, you don't know. Things just look weird. I mean, the SPACs looked weird to me. FTX looked really weird to me. I couldn't figure it out. The smell test. And sometimes we get picked off, like we've been in situations where, we basically, where we've been subjected to fraud. I mean, it happens. But you know what? I don't care about that stuff. That's just, to me, that's the cost of success.
And so what is your sense? So just to sort of move into, because you can make any narrative you want, any day you want, based on wherever you point your attention, right? You're like, oh, it's the greatest day ever. Oh, it's the worst day ever. It depends on
Sure.
which filter you're looking at in your brain. But in the scope of opportunity, in terms of not the size of the opportunity, let's say that I would say that the dollar size of global opportunity has got to be the largest it's ever been, just by virtue of population size, technology size, platform of economics, blah, blah, blah. But more interestingly, what is the scope of the opportunity per capita on a distribution? In other words, it's clear, Elon Musk or 200 people or 2,000 people are going to make a gajillion, trillion, billion, trillion dollars. But, how broad is the middle part of the distribution of opportunity, in your opinion, right now, relative to when you were a kid? Or relative to your perception of other historical points, of inflection points, which I'm asking, because I think we are at an inflection.
I actually, it's a really good question. I don't know the answer. I would say that the biggest difference in 2023, as opposed to other times in other points in my lifetime, is the speed at which things happen today. It's the velocity of the movement today. It's extraordinary. So the magnitude of the move, being able to get from point A to like point Z, is just crazy how fast, sometimes you can get there, and compared to the way it used to be. So I don't think the opportunity is any greater. I think the speed at which you can get from one point to another and the magnitude of those moves has just been accelerated crazy by the amount of wealth that's out there.
But what of the lost opportunity of the transition to digital culture for young people that gives them less belly to belly exposure to, the Tom Sosnoffs or whoever, there's sort of the hierarchy of the office, which has all whatever the burden and bureaucracy that people may associate, but it's a massive field of opportunity for young talent, especially for people who don't have privileged backgrounds, but could walk into certain buildings and places, whether it's on Wall Street or entertainment or wherever, and be able to show skills and contributions that were attractive. And, I think of it because they talk about the Hollywood being through video submissions instead of physical auditions now, which is sort of where it's like, now you're a 19-year-old actor, you don't get to go to Midtown and, do a whatever your chicken dance is. Like you send your YouTube video and hope for the best, which eliminates any of the body to body with the other actors and drinks after, and maybe not this project, but that project, and just being on the floor, so to speak, or on the newsroom, which is where I was, which was the same thing. Like it was where the newsroom was
we're a culture that adapts. And I think that, we all had, in our generation, we had chances to, we had to impress in person. And, we had to make our case, and maybe we learned to be good salesmen that way. I think kids today and young people today learn how to be really good videographers, and they can do their, they've learned to capture themselves in a really strong light digitally. I don't know if that matters, because ultimately nothing really changes in that regard. I will say that the most successful people you see are pretty much self-made, which means that the system works. Like there isn't necessarily this pass-through of wealth that, used to be like nobody had a chance. I don't think that's the case anymore. I think that most of the wealth creation we see today, the crazy wealth creation, is all from people that come from basically nothing.
Mm-hmm. And who basically through performance and value,
I mean, today,
whatever, with the obvious thing. Elon is kind of the cliched example at this point.
Yeah, but in today's world, like it costs a lot less money to build certain things than it may have, on the same scale, 20, 30, 40 years ago. That's all.
Well, he also goes, because you made a great point, I think, last week about the flattening of status as one of the key components of value and opportunity, along with some of these other things because of AI.
Also, we've exposed the we've exposed our own kind of culture as being very willing to speculate. I mean, I know we keep saying like everybody wants to be passive and loves their risk-free returns and everything else. But when you look at everything from the meme stock explosion to everything else, this is we are a society that loves to take risk, and we embrace speculation. And, as long as it can ultimately trickle down to a consumer level, and there's lots of opportunity that, 20, 30 years ago, all the opportunity everybody ever got was, would you like to invest in my restaurant or my bar? That was anything we ever heard. Now, young people are starting, crazy, I'm looking at, investing in some very, 20, 22-year-olds, 23-year-olds, like crazy young people building super cool stuff. And I'm not going crazy, but I mean, the stuff that they're doing is just wild, and it's fascinating to me. Yeah. Maybe it works, maybe it doesn't. But,
but that's interesting, like, because going back to the filter, right? Like, it's like, where's like between the sort of exploitation and opportunity, going back to that original filter, it's like, okay, liquid is a filter, right? Or culture then is a filter. Like, I don't want the 20% by Friday guy or whatever the thing is. And then also now you're like, okay, there's something in that young energy. I was talking to a nephew who's 27, who's sort of been in the Valley for a long time, and he perceives himself to be kicked. He's like, he's old. Like, he's like, I'm screwed. I'm going to be 27. Like, they've milked him. You know what I'm saying? Like, the Valley's gotten him from 19 to, 24.
But that's crazy.
I'm just saying that's the perception.
Wrong.
Of course he's wrong. I'm just saying that there's that perception of that, the value of that young energy is it's fetishized more in technology than any place else, I guess.
Yeah, I agree. So this gets us to a point which is interesting, because one of the things I wanted to talk about today was, the idea that see I'm all about encouraging speculation. I hate people I hate the concept of going through life being risk averse and passive and risk free with your investments and all that kind of stuff. I love the idea of speculation, because I think speculation breeds, opportunity. It gets you engaged. It teaches you all these different things. It's so important, regardless of whether you're successful or not, whether, it doesn't even matter. Just it's one of the critical tenets of a good life and wealth creation, everything else. Yet in Washington, there's like a movement now, to eliminate, for optics, to eliminate the politicians from being able to make trades, for lack of a better term, whatever commodity trades.
I think it's individual
trades.
Stocks. I think it's like I had this rule when I was an anchor at CNBC, which is even more idiotic. But if you were an anchor at CNBC, no individual securities, only ETFs.
Yeah, if you're an anchor at CNBC, or if you're an employee of Goldman Sachs or Morgan Stanley or Wells Fargo, all the same things. Even some brokerage firms have those dumb rules. Like, it's incredible to me.
It basically sounds like they're proposing the same rule for Congress, like the CNBC rule or whatever. Well, I don't even know what their rule is now.
Yeah. That's like telling,
funds and ETFs, and you got to do what 90 days or whatever the jazz is.
That's like telling the guys that were calling the British Open, that were in the press box of the British Open, you guys can't play golf anymore. You can only call it. Yeah.
But the reason this is so absurd to you, because I've talked to you about this before, and I think this is where people, maybe don't come around the bend with you, is you're really certain that whatever they think they know, or whatever rule they think they're going to pass, and its relevance to the stock price is not nearly as large as everybody fears that it might be, or as the individuals themselves think it is. Because it goes to your thing. You're like, if I told you the Fed decision before it happened and you put the position on, do you think you'd be right? La, la, la. And so, but people then look and then say, well, hang on a second. Like, if there's going to be a government budget for a new chip factory in Texas for whatever, that has a meaningful price on for the. And so I'm interested how you dismiss, like, how you have some degree of skepticism to the knowability of the.
Yeah. Well, of course. First of all, if you opened it up and basically encouraged, what you say is
take your shot, Nancy Pelosi. That's what it's called.
They're doing it exactly the wrong way. What should be is they should say, listen, we realized we made a mistake. We realized that the optics here, like everybody thinks the optics are something, but what we're going to do is exactly the opposite of what everybody thinks that we kind of should do. And we're going to say, hey, you know what? We want every one of you. This is how crazy
a mandate. It's
a mandate, essentially.
The requirement.
It's a requirement. We want every single person here.
If you're a sitting member,
every time you vote on something that's tradable, you have to trade it
and publish.
Exactly. Because otherwise, if you don't have any skin in the game, it doesn't mean anything.
Not even qualified to vote.
I don't like a lot of things about private equity, but one of the things I love about private equity firms is they might have, let's say, 20 partners, right? No deal gets done unless every partner participates in every deal. So that if you're going to vote on whether or not the firm is going to write a check for $100 million, before they write that $100 million check, every partner has to put their own money in.
Which is like the old partnership model, like Salomon Brothers in the 70s. Like
whatever. The whole point there is that all of a sudden, everybody thinks about their vote a little bit differently. I want
it's like if you want to go to war, you go with your children first and then call us about the war. It's the same idea in principle.
Every single thing. I know this is just, I'm just making this up, making it broad, having some fun with it. But I would like every person to be encouraged on
I like the requirement.
The requirement is you have to put some money in.
Like you have like a chip card that it like doesn't activate to enter you, like to swipe onto the floor to vote. They must have
you have to have skin in the game. In every one of your damn decisions, you have to have skin in the game. So that takes a lot of the politics out of it, and it turns it into what it should be all along, which is a decision based on merit. And so we're doing exactly the wrong thing by trying to say, hey, you know what? Nobody.
Yeah, but what if I vote? I'll just vote for an energy monopoly, buy the one energy company, and then pass a rule that says you can only have one energy company. I mean, I'm just saying that does create an incentive for extreme distortion in terms of the regulatory structure, which I would presume there would not occur. Hopefully,
yeah. My point is that the backbone of capitalism and free market capitalism, the whole backbone of this is attracting investment, creating liquidity, and making every marketplace efficient. And what this current proposed legislation is doing is exactly the opposite. And it's essentially saying we're going to let the optics rule over what really should be done. And what should be done is encouraging everybody to actually say, hey, you know what? Anybody here, any senator, any congressperson, hey, we are going to be voting on whether or not to pass, like you said, a chip factory in Texas for AMD or for NVIDIA. Okay? Place your bets with your broker. We don't give a crap. Because there's no chance anybody does anything.
How could it not be good for the stock?
Easy, because half the people are going to vote no. It's perfect. It's the best thing in the world. It creates the absolute perfect two-sided market. Because the stock will either get ahead of itself, and then the pros, you got to remember.
Sure,
there's nothing pros. When I say pros, I just mean real risk takers. They would love nothing more. Time and
resources to knowing as much.
They would love nothing more than an artificial emotional move to the upside based on what a bunch of dumb politicians think. They would come in and they would let it rally up. This would be the classic, going back to trading places. They would let it rally up, and then they would just all come in and slam it in 2 seconds. It's how you destroy.
But that will go back to the manipulation incentive for capitalism. Going back to the beginning.
It's how you create true efficiency. It's also how you get people in government and in politics to truly understand how markets work. If you don't understand how markets work,
I totally agree with that. Yeah.
You cannot be an efficient politician unless you understand how markets work. without understanding market structure. I listen to some of these hearings, like I listened to when the guy from Robinhood, testified. I listened to, a couple of other, my buddies, when they testified in front of Congress. And I was like, I mean, you listen to this stuff and you want to throw up. You're like, oh my God, they don't even understand anything.
The degree of separation between their perception of the world and reality is so big.
Yeah. All you want to say is, hey, if you think that's the case, I'll tell you what, I'll let you do as much as you want.
Mm-hmm.
It reminds me of a segment we had years ago on Tasty when we had Mike North. He's one of my favorite Chicago sports personalities. Right. And Mike was a shock jock, one of the first ones ever. And he came on the show when we first started because he helped us to teach us about, radio and talk shows and stuff like that. And Mike was so funny, and he was a sports junkie. And he'd come on the show every time. And he'd tell me and Tony, "Yeah, I bet 2 dimes on this game. I bet a dime on this game.
And action all over town.
I'm making bank here. I'm doing this here." So Tony and I looked at each other. We go, "Mike, we'll take the other side of every bet you have with no juice." He looked at us. He goes, "You guys are the biggest idiots in the world." We go, "Listen, all we know is you can't win. So we'll do the opposite of whatever you want to do with no juice." And of course, he lost a lot of money to us.
Oh, now, what duration? Like, was that a season? Or
it took about a month before he quit, and that's with absolutely no vig. And he basically was down, I don't know, it was like $5,000 or $7,000 to us, and he was so mad. But my point is, all we know, we didn't care what he bet on. We're just market making, and we just knew he was going to be wrong. That's
right, which is where it goes to my other filter, which is like, so liquidity is a filter, culture is a filter, but then the other filter is like situations where the counterparty has a strong belief that they know something.
Exactly. I love that. I love that. That's why when people go, "Oh my God, Nancy Pelosi knew something." Really? She didn't know anything. They have no idea. Markets don't work that way. They just don't work that way.
So your best case is a bunch of quote unquote customers, as you like to call me when you insult me when I buy Tesla puts or something. So as far as you're concerned, all those Congress people just become customers, so to speak. And the more the better, and the bigger the better, because they're just, we wish you the best. Good luck out there.
I mean, I have many times told the story of asking Ben Bernanke at a live event, "Hey, what do you think here?" And his response, "Hey, I don't know anything." Basically, not just what do you think, but like, how are you managing your portfolio? He goes, "Hey, I don't know anything. I'm having a guy at Merrill Lynch manage my portfolio." And I'm like, "You're freaking Ben Bernanke. Okay? If you don't know anything."
He's indexed. He's just flat out indexed.
If Ben Bernanke can sit in front of a room of 250 hedge fund and industry people at a Citadel conference,
trillions of dollars in assets, and
get paid $5 million a year for making one speech, and he says, "I don't know anything. I just let some guy at Merrill Lynch manage my money." I'm like, this
is a con job.
Exactly. You're Ben Bernanke. I mean, if you don't know what interest rates are going to do, who the hell else does? So like, you think some politician knows what interest rates are going to do? I can't accept that argument. And in return for that, we're going to create a generation of financial idiots that are running, that are running this country.
But would you run the same thing at a Goldman or a Morgan where there's an incentive?
Of course.
Where there's bona fide inside information, because I'm an M&A banker and I know Tasty trade.
First of all, you can't trade on bona fide information. If you trade on non-public material, non-public information, then you go to jail. There's a big difference.
So you're good. So insider trading rules are insider trading rules, whether you're a congressman or a Goldman banker,
of course,
anchor,
of course,
all that jazz. Of
course.
All right.
I mean, if you know that a company is going to be taken over tomorrow, that's you're trading on material non-public information. That's different. But if you know that you're going to vote for something and how you're going to vote for it, who cares? I don't care what you do.
And if you know that the factory's a go in Texas,
cares.
Because
doesn't mean anything.
Has an opinion on that anyway. They've seen the building. The analysts have been. The hedge funds have been. They all know.
I mean, here, I'll give you an example. This morning, there was a story that came out, and Vanetta did it, and I think it was that Spotify was raising their rates. Okay. Now, we all know what happens when Netflix raises their rates or when Tesla raises their car rates. So the story came out before the opening. Spotify, for the first time in multiple years, is raising their rates. So the first thing you would think is, wow, if I knew that yesterday, I'd buy the piss out of Spotify.
All day. Where I buy call options for miles.
Yep, down $9. I'm just saying, okay? All I'm saying, Dylan, is that
I'm being a little dramatic. I know.
I know, but all I'm saying is it's not as easy as anybody thinks. It doesn't work that way. And there are people that are masters of the obvious, and there are times when you're like, well, if I knew that in advance, I would have killed it. The reality is, you know what? More times than not, you wouldn't have.
Of course.
And that's just the way it works.
Also goes to your, which I think we talked about this last maybe a month ago now, but that's what goes to the sort of, I mean, I forget you had a word for it, basis trading, I think you called it, where again, the example was, I think we did long Coinbase and short Tesla, short Apple, and, short Apple, short Tesla did not pay because it just kept going up. But Coinbase did because it rebounded from its low. The point is, like, sort of multiple extremes on opposite ends. Just it's the probability of payout, I guess. It goes to your like odds of actual something positive happening for you. But that's for another day.
Yeah.
But yeah, I like your rule where everybody's got to play and publish.
Yeah.
Then they can ridicule each other the next day. Like, I cannot believe that you bought those calls.
And then they'll be on both sides. And then they'll be like, oh, so I sold it, you bought it. Then then it gets really fun.
It's a different day at the lunch counter than when you go to the cafeteria.
Then the whole world's going to understand markets. It's going to blow everything up. It'll be amazing. All right, that's good stuff today, Dylan. I love it.
Listen, I still think one day we should get the Fed decision early just to see what happens. I know we got to go, but then when I first started at Bloomberg, there was a guy the greatest financial reporter of all time. His name was Vinny Del Giudice. And it was like one of those voices that you would hear on the radio in New York. Like, it was like one of those New York news radio voices. And Vinny Del Giudice worked in the subterranean catacombs of the U.S. Treasury building. There was like 4 reporters, one from Bloomberg, one from Dow Jones, one from AP. But their offices, they didn't have offices in the news bureaus in Washington. They had a desk in the super basement of the Treasury. And when the Fed would would make rate decisions, they might still do this. They probably still do this. They would close that room, turn off no phones, no emails, like they unplug, and tell those reporters for 10 or 15 minutes what the Fed decision is, and allow them to write up their coverage and then release them to publish it at 2:00. So the whole thing's a racket to begin with. They do the same thing with OPEC in Vienna, where like there's a production decision, but the OPEC reporters from Bloomberg or Reuters or whatever. But yeah, Vinny Del Giudice, I remember he used to complain. He's like, I've been locked up in the basement of this Treasury. And then it'd be a big deal because you'd be like, we're in New York, like, let's go to Vinny Del Giudice. They unlocked him in the basement. What did they do, Vinny? Well, they came in, It's anyway, characters of the financial news world and bizarre cultures. But I also like the guy that there was the OPEC minister, the Saudi OPEC minister, because they run it all out of Vienna as a way to like whatever it is. But the Saudi oil minister would only make statements on the change of oil production while jogging. So if you weren't a runner, like you would go for these 5 a.m. runs. So like the news agencies like Wall Street Journal, you'd be like, we got to get a young reporter who's a good runner and send him to Vienna so he can go running with the Saudi oil. And because if you don't go running, you'll never know, I'm going to do 10 million barrels. Anyway, they like to do, it's like hazing. People like to haze each other. That's the theme of those stories.
I like it. All right. I'm Tom Sosnoff. He's Dylan Ratigan. We'll be back next Wednesday, 1 p.m. Central Time for Truth or Skepticism. Dylan, have a great week.
Zen opportunism, sir. Safe travels and Godspeed.